I think what the mistake people think is they have to buy a whole Bitcoin, and I mean, they can buy a Satoshi, a Satoshi every day, um, instead of a latte. And more importantly, you know, if Bitcoin network value plays out and Bitcoin, yeah, let's take Uran's number.
Even the smallest Bitcoin investment today can shield you from dollar inflation as Bitcoin's value skyrockets 20x, leaving fiat money in the dust. That's the prediction from Thomas Lee, co-founder and head of research at Fundstrat. Lee emphasizes that Bitcoin has evolved into a legitimate asset class, backed by financial giants like BlackRock, the world's largest asset manager. BlackRock CEO Larry Fink encourages investors to allocate just 2 to 5% of their portfolios to the asset. According to Lee, this modest allocation has already changed lives, with early adopters seeing massive returns. Even a small commitment now could deliver exponential gains as Bitcoin continues to grow. Make sure to stick around until the end of the video, as Tom Lee shares how even a small Bitcoin investment can deliver massive long-term gains. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join 50,000 plus others to become a better crypto investor right now. Now here's Tom Lee with his Bitcoin outlook.
You know, Bitcoin is now essentially a bona fide asset class. I mean, it has the backing of BlackRock, which is the largest asset manager in the world. Larry Fink even today was speaking post-earnings about how important Bitcoin is to the future of BlackRock, and it's something that they're encouraging clients to adopt. I think that the mistake someone might make if they're interested in Bitcoin is thinking they have to go 100% of their portfolio into it. They only need to put 2% or 5%. And, you know, if you think about someone sitting on cash, that's like 1 year's worth of interest on their portfolio. They just have to dedicate to crypto. We made that recommendation when we first wrote about Bitcoin, that they should put 1 to 2%. Today, if they didn't rebalance that recommendation, it's 80% of their total portfolio. So it's been a huge winner for our clients, and many have told us it's really changed their lives by making what they saw as a kind of a low risk bet, 2% allocation into crypto. And I think that's how people should look at it today, because Bitcoin isn't peaking, it's not that widely adopted yet. There's still so many skeptics, and there's many financial firms that are restricting their clients from having access to exchange versions of Bitcoin. So the ETF today is not even approved for many firms, and it tells me that there's still a lot of future holders of crypto. And I think the mistake someone could make today thinking Bitcoin's not relevant is the financial system does work really well in the US for wealthy Americans, but even in America, I think that only 45% of Americans actually have a bank account, and another 25% consider prepaid credit cards and debit cards as their primary form of banking. I mean, banking is very expensive in America, and that's for one of the wealthiest nations in the world. Outside the US, crypto is really going to prove to be a much more low-cost banking system for folks, especially if they want to do remittances and move money around the world. I mean, I think Bitcoin's blurring, but even what the definition of money is, it's already blurred the definition of community benefiting from holding something. Because, in a traditional financial system, let's say you take Amazon and you have Amazon customers, and they contributed to the growth and the fact that Amazon is one of the largest companies today. It's really the customers and the loyalty of the community of buyers and sellers. But the only people that benefited from that are actually the shareholders, the ones who actually provided the capital to Amazon. So it didn't create value for the community itself. I mean, Bitcoin is so different, right? Because Bitcoin is benefiting those who are actually holding it and using it.
According to Lee, Bitcoin's adoption is just beginning, leaving enormous potential for future growth. Despite its recognition as a legitimate asset, skepticism and limited access, such as the lack of ETF availability through many financial firms, have kept Bitcoin underutilized. Lee predicts that as these barriers break down and more people and institutions embrace Bitcoin, its value could skyrocket. This early stage of adoption offers a unique opportunity for investors to get in before Bitcoin becomes widely integrated into mainstream finance. Lee sees this as a time of transformative growth, where Bitcoin's increasing popularity and use could drive significant returns for those who act now. Now, let's return to Thomas Lee as he continues to share his insights.
That's why I think it is really blurring what an asset is, because it's blurring loyalty and rewards along with equity and capital and rent seeking. I mean, all these concepts together. So the idea that it's also blurring the definition of money, to me, makes sense. I mean, I've been following markets for for more than 3 decades, believe it or not. And so I've experienced and covered many recessions. Recessions rarely happen when markets are all saying a recession is imminent. Markets participants aren't that smart. So the fact that so many people think a recession is imminent, and we see it. I mean, we do many meetings with clients, institutional investors, that view recession as their base case. I mean, that would just mean everyone suddenly is a great forecaster of the economy. And as you know, nobody can forecast the economy. We don't try to forecast the economy, but the only reason we think a recession is less likely is because everybody thinks a recession is likely. Mining is important for Bitcoin. I mean, there is no Bitcoin without mining. And the miners, I'd say it's been trickier as equities, because I'm thinking about them as stocks, because they are essentially beta to Bitcoin. But I'd say over the course of the cycle, they should outperform Bitcoin. But it's, of course, I know it's been tough because, we have a lot of clients that have been long miners. And, today's been an okay day, but really for this year, it's been very painful for them to own it versus Bitcoin.
This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness. I know yesterday's pullback was really painful, but to us, I think it's a good opportunity for investors here. As context, the market has been bleeding lower. If you look at internals for the last 10 days, yesterday looks capitulatory because not only did we have a 90% down day, but the VIX, the spot VIX, exploded by 75%. There's only 4 times in history where it's risen 60% in a day. So yesterday was the 5th time in its 35-year history. Of those 4 times, the market recovered all of its losses within a week, 3 out of the 4 times. The 4th time it took a month. So I think what you had was people panicking to get out of what they thought was a momentum trade that's ending because we're so close to year end. But here's the interesting thing. The forward VIX futures curve barely moved. So it was almost as if people were seeking protection through the VIX yesterday. Well, unfortunately, when markets get nervous and they're risk off, and of course, buyers disappear, stocks that aren't as liquid get hit harder. There's a lot of folks who don't want Bitcoin over 100,000, and some of it may be the exchanges themselves are concerned because there is a pretty low supply of Bitcoin available over the counter. So you have a supply shortage. I'm still confident Bitcoin's going to close much higher before year end, well above 100,000 before year end. It's just a matter of time.
In other news, Tom Lee has also made a bold prediction that Bitcoin will soar to $250,000 by the end of 2025. This forecast comes after his accurate predictions last year, including the S&P 500's 24% rally and Bitcoin surpassing $100,000 in 2024. Lee's confidence in Bitcoin's growth is based on 3 main factors. First, the introduction of 11 spot Bitcoin ETFs in January 2024 has made it easier for institutional and retail investors to invest in Bitcoin, driving demand. Funds like BlackRock's iShares Bitcoin Trust have broken records with $35 billion in net inflows, highlighting the growing interest from institutional investors managing trillions of dollars. Second, Bitcoin's April 2024 halving event has reduced the supply of newly minted coins, creating upward pressure on prices as demand continues to grow. Historically, Bitcoin's price tends to peak 1 to 2 years after a halving, as seen with its 690% surge following the 2020 event. Third, falling interest rates have created a favorable environment for risk assets like Bitcoin. With the Federal Reserve cutting rates, investors are more inclined to take risks, boosting Bitcoin's appeal. Lee predicts 2025 will be a volatile year for Bitcoin, with its price potentially dipping to $60,000 before surging to $250,000 by year-end. He emphasizes the importance of holding Bitcoin with conviction, as most of its annual gains often occur within just 10 trading days. Selling during downturns could mean missing out on these critical gains. While Lee's forecast is optimistic, he cautions that no one can predict the future with certainty, and investors should be prepared for Bitcoin's high volatility and the potential for losses. Now, don't forget, if you want guidance through the exciting but sometimes unpredictable world of cryptocurrency, our daily 5-minute crypto newsletter is here to help. Don't pass up the chance to stay updated and make informed choices in the crypto market. The link is in the description below. Anyway guys, hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.